This is your technical update from the LMAX Exchange Research and Analytics Desk for Wednesday, December 17th, 2014. Euro dollar. So the 50-day moving average becomes critical with euro dollar, with the market now trading and recently poking back above the moving average for the first time in several months. The 50-day moving average has done a good job of capping the downtrend, and a break and close back above the 50-day moving average on Wednesday would suggest that the market is potentially considering a reversal, at least over the short term, which could open the door for more significant upside back towards the 130 area. However, inability to close above the 50-day moving average on Wednesday will keep the pressure on the downside and suggest a lower top is in place ahead of the next bearish downside extension below the recent yearly low that we saw at 122.48 and towards the 2012 base at 120.40 further down. Sterling dollar. Cable continues to trade off of its recent yearly low at 155.41, with the market locked within a consolidation. Only a close back above 158.26 would be required, or only a close back above 158.26 would take the immediate pressure off the downside and suggest a more significant short-term basis in place. Dollar yen. Dollar yen has recently extended its correction all the way down to the 115.50 area, with the market testing the 38.2 fib retracements off of the major October low to December high move. A break back below 115.50 will open the door for additional corrective action into the 112 area, while inability to take out 115.50 will suggest that the market is looking for a higher low ahead of a resumption of the bullish trend. Euro Swiss. Euro Swiss is in the process of consolidating just off its major psychological barrier at 120. The market has recently put in a fresh 2014 low. A break below 120 will open the door for an acceleration of declines, while inability to take out 120 followed by a push back above 120.45 will suggest that a major base is in play. Aussie dollar. Aussie continues to extend declines to fresh 2014 lows, with the market now focused on a test of the major psychological barrier at 80 over the coming days. Key resistance now in the short term comes in by the high from the 11th of December at 83.75, but ultimately any rally should continue to be very well capped ahead of the previous 2014 low at 85.41. Dollar CAD. Dollar CAD remains locked in a well-defined uptrend, with the break above 1467 opening the door for a measured move objective towards the 1750 area over the coming sessions. Any setback should now be well supported by that previous resistance turned support at 1467, with only a break back below 1313 to compromise the bullish outlook. Kiwi dollar. Kiwi remains under pressure after recently breaking below 76.60, the previous 2014 low, all the way down to 76.09. The market rallies have been well capped now by the 20-day moving average, with a fresh downside extension expected on a break back below 76.09 to expose 72.85 further down. Ultimately, only back above 80.35 would compromise the bearish outlook. The SPX 500. SPX 500 is now in the process of putting in a bearish outside month formation, with a bearish close in December to confirm and likely signify a major top and open deeper setbacks in this market back down towards the low that we had seen in October in the 1820 area. Gold. Gold has been locked within a range between 1131, the multi-year base from back in early November at 1131, and the high that we had seen back on the 21st of October at 1256. A break back above 1256 would open the door for a shift in the structure, while inability to do so will suggest the market is looking to put in a lower top ahead of a fresh downside extension back towards and eventually below 1131. That's all for today.